Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in tonight's free video I wanted to take a second to review two of the free ideas that I shared with you about a week ago, because I think the best way to make use of these videos, if you're following along with them on a daily basis, or at least the best way for me to follow up on this, is to share these ideas prior to the move, because obviously that's where we're going to have opportunity and where you can still take advantage of these, and then to come back and review them and say, okay, how did it work out, and did the ideas follow through with the trading plan? When you come in and look at SQ, this is pretty much exactly what you want to see. Now, there was one day right in here that was kind of tough, and closing down near the lows is not especially optimal, but I think if you can step back and look at this with a big enough time frame and recognize that this is still just consolidation near the highs, it would have been a little bit easier to keep you in the move, and of course a lot of that revolves around position size. But the whole concept behind the idea is coming in and accumulating a position while the squeeze is forming, and then ideally taking profits near extensions when the squeeze fires. So the squeeze and square did end up coming through in a really nice way, and then we were piggybacking off the idea that SQ and PayPal would move together. Now, of course, news came out today in PayPal about their business relationship with Apple that has come to light, and obviously anytime you can have news like that that backs the idea, that's great. So we've been scaling out of this. We have 5 contracts remaining in the position, looking to see if we can get up into that 1618 extension, but ultimately this target too has been met, and it's the exact same setup. So if nothing else, you can get a feel for what we're trying to do with these, where you've got the squeeze in play, you've got the underlying that is chopping through the 8 and 21, which is a good zone to focus on buying, and then you focus on taking your profits when you move into extensions of those previous swings. So that was a very textbook setup on both of those. I like pointing out trades, especially like those in PayPal, because I never would have bought the move based off of just the news, but already being in the position, of course I didn't know that was going to be announced, but technically we knew that we had a reason to be pursuing this, and it's nice, and something like that can give you the trigger to get you on into it. So those are two very basic squeeze setups that I've been tracking. Another fresh idea I wanted to show you, and something that I've been in for a couple of days but I think is still relevant, is the idea of playing Google into earnings. Now, there's a couple different ways of doing this, and one of the ways that I think is something that I've started adding into my trading more here lately is looking for the rise in implied volatility, but not doing it necessarily in a way where you're just buying the out of the money calls and puts, but doing it in a way where this is structured to help the individual underlying that you may be trading. So we're going to look at a tool here in a minute that I've been using to kind of help break this down, and essentially just suggested that this is one of the better ways to position yourself for Google, because we're taking an option that has more intrinsic value from the call option, and then obviously that's going to give you bullish deltas, and then when Google has a day like it does today, not only are we ideally making money off the increase in implied volatility into earnings, but then you're also maximizing the directional point of view on that. And it's just something that I have found to be very helpful in positioning myself for these earnings going into that announcement. So a couple different ways of looking at it. Tacked on a smaller vertical here, you can see the shorter dated series will not have the same effect from earnings. So it's a little bit different idea there. But this is something that John and I both have been finding very helpful in our work. And if you would like to learn more about it, we're going to have a free webinar on it on Monday, July 17th. So that'll be the first thing out of the gates next week, and that's going to be with John and the creator of this software. So if it's something you're interested in, I know you've seen us share this quite a bit, that Monday evening webinar that will start at 7 p.m. Central, and I think that would be a great opportunity to learn more about this and incorporate it into your trading if you also find that helpful. So I hope those ideas give you a couple of things to revisit, kind of look at what we're looking to trade for these primary daily swing setups, and we'll update more of those in the next free video.